You.
It can be on the video in the beginning, right, Ram? Welcome, everyone. Let's give it a few minutes for others to join. And let's start at 7:05 exactly. Welcome, everyone. We'll start in a few minutes. Oh, it's 7:05.
Let's get started.
All right, Ramu, it's already on recording. It's good.
Welcome, everybody. Today, we're here with Steve from King Operating. We're going to be presenting about investing in oil and gas with King Operating Corporation. So let me give you a little background about our partnership with King Operating, how I met Steve, as well as our story and background to what brought us to today's webinar. Steve and I had the privilege of meeting at an expo recently in Houston, and immediately they caught my attention between their demeanor and I want to say even hospitality, right? And the more we got to talking, the more I found out Steve and I actually have quite a lot in common. We're both Boy Scouts, and we have spent a lot of our lives in the same part of the country, or I should say the same city. And we share a lot of the same value systems. Now, when I went deeper in researching about the company's founder, Jay Young. He's a fourth generation oil executive. They've been in oil and gas production in their family for over 100 consecutive years. Turns out that he is on the board of Circle 10. Circle 10 is the Boy Scout Council for Dallas-Fort Worth, which is where I grew up and got my eagle from. So come full circle. I also worked at the Boy Scouts, as many of you know. So, and I've done consulting for Circle 10, and just to know that a board member of an institution that I have high regards for is the chairman and CEO of King Operating, our partner. When Steve and I started talking about the returns that they're talking about, your jaw drops. How is this possible? Started just grilling him with questions. I think Steve and I probably spent 6 solid hours together between 2 to 3 days, just one-on-one of me mostly grilling him of probably 5.5 of those hours with questions and scenarios to verify the situation and the investment. So some key things that I took away from that, I said, hey, what are the big risks, right, in oil and gas investing? He said, well, there's a few parts. One is oil and gas are two separate things. And historically speaking, when oil is up, gas is down, and vice versa. So it's a 50-50 portfolio. It's balanced. We're always selling something that's profitable. Second is the price of oil. And I don't want to steal Steve's thunder, but he's going to talk about how with the current energy predicament that the world is in and the unique situation that the US is in, this is an excellent time to get into oil and gas investing. To put simply, our country is in dire need of oil and energy right now, and so are a lot of our European allies. Now let's kind of get back to King Operating as a company. Not only did we meet Steve, we met all of their vice presidents. We went to their office. We met Jay in person. Jay gifted us his book, which Steve will talk about soon, and I'll also let my dad talk about very soon. My dad's read it cover to cover. I think it's the first book I've seen my dad read 1/3 of in a day. He finished the whole book in 3 days. So definitely a riveting read if any of y'all are interested. The crux of it is that Jay is an innovator in the oil and gas space. He took a traditional oil investment, which was very risky, and he copy and pasted the multifamily model that all of our investors and us here at TeamVelu Investments are used to for oil and gas, which is what was very attractive for us. So the model and the returns are very similar. So the investment and the business structure are very familiar to you as well. It's just the asset class is different. Now, before I hand it over to my dad to talk about the book and about the partnership a little bit more, I'd like to share one final thought with all of you. Why oil and gas? Why now? As you all already know, interest rates are rising. The federal government, or I should say the Federal Reserve Bank, and the Federal Reserve Board are committed and charged with the responsibility of curbing inflation. Due to a myriad of reasons, they are not currently successful in that endeavor, but they have a one-lever solution. All they can do is play with interest rates. So they're rising and rising and rising. The Fed chairman, Mr. Powell, has said that he wants unemployment to get to 4.9% or about 5% before everything is normal and they're going to ease back. Now, here's the kicker. We are 4 million more jobs than there are workers in this country right now. So they have to raise interest rates to where those 4 million jobs disappear off the market and then create unemployment. That means there's going to be a lot of pain. And the first target is often investors, right? What we're trying to do. The real estate market is out of hand. Investors are borrowing cheap money and they're coming after basically people who are creating wealth and raising prices, right? Think of the traditional apartment model. So our business and our investments are at greater risk than they were before. We're not in as a friendly environment like we were in the last 4 to 5 years. Now, that doesn't mean it's doom and gloom for real estate or apartment investing. You just have to find the right one. All it means is if you had 10 investments that you reviewed last year, you're probably going to review 3 to 4 this upcoming year, right? They're far and few between, or at least very less. Oil and gas is going to be much more stable. And when the economy is unstable, alternative investing becomes the main investment, and main investments become alternative investing. That's why we are very excited to present to you today oil and gas investing with King Operating. So I'm going to hand it over to my dad to talk a little bit more about the book and our relationship with King.
Thank you, Ramu. Good evening, everyone, and thank you all for joining this evening. And I really appreciate Steve and his colleagues for joining today. And in fact, it is pretty exciting. When I also heard from some of the audiobooks I was learning this week about tax savings and all that, big players definitely play the game of oil and gas. But at the same time, it was risky. And that is why the government gave almost 100% depreciation on the first year itself. Even if they lose the money, at least they get the depreciation. But right now, the technology has improved so much. They know where exactly the oils are. And also, they are not drilling only one well. And they create a proof of concept and pump as much oil as possible. And once the production comes, they already have a potential wells around. So in apartment investment, if you increase the net operating income, then you will be able to sell it for a profit, right? Who is going to buy that? And when they want, the buyers need to have some meat there. That means if you upgrade 50% of the apartments, you leave 50% of the apartments for the others to come and improve and then increase the value so that they also make profit. So they are interested in buying yours. So that is the principle they are using, which means they create the proof of concept and then show there are so many other oil wells where you can start drilling and then make money. And what is the potential they show, and they exit within 3 years. And their first of this model has been successful, and they exited with the 3x. And there is a second fund. This third fund is 3.5, and they are not buying everything now. It is already, the lands are all purchased, and then everything is ready to go. And I'm going to let Steve continue with all his presentation, where he's going to cover quite a lot. And then in the question and answer session, we can definitely discuss a lot more with whatever questions you have. So over to you, Steve. Thank you very much. And Ramu, please, you can pull up the PowerPoint right now.
Yeah, Steve, would you like to introduce yourself and then we'll get into the slides?
Absolutely. Well, first, I want to thank both of you gentlemen for accommodating us and allowing us to tell our story this evening. And I want to additionally welcome my colleagues, Anne French, Cole Oliver, and Tom Gray, who have been very instrumental in building this relationship. And it's just a real pleasure to join all of you tonight. I want to welcome our guests who are out there in Zoom land and kind of let you know what we're going to do tonight. So we'll have about 20 minutes of slide presentation, followed by 10 or 12 minutes of Q&A. And my mission is to make this a very simplified presentation. Ramu had asked me to tell you a little bit about myself, and I'll make it very brief so we can dive into the meat and potatoes here. So I have been in oil and gas the majority of my adult life. My first real job, if you will, out of college was with Shell Oil Company, and I spent 12 years in the state of Ohio in their real estate department, and that allowed me to do a lot of what they call landman work, which part of our presentation will speak to in a moment. And I also did a lot of commercial work, which is not too much different from what you guys have been doing in the multifamily arena. So I was in charge of all the convenience stores in the state of Ohio and purchasing land, renewing leases, etc. So needless to say, I've been around oil and gas, like I said, most of my adult life. The other thing I think you would want to know is, more importantly, I have been an investor the last 15 years. I have actually not only participated in the King investments, but our competitors as well. And I tell you that in full transparency because there are some differences, and we'll get into those differences in a moment. But anyway, I want to welcome everybody. And Ramu, if you don't mind, if we could dive into the slides, please.
Yes, sir. Let's go.
So the title of our presentation is the upside of oil and gas investing. And Ramu, if you don't mind, you can go to the next two slides. I'll speak to this briefly. So if any of you are taking medications, if you have ever taken the time to read the back of a prescription bottle, it's going to read much the same way as this page reads. And I say that jokingly because if you've ever read a prescription bottle, it would probably scare you half to death and you would never take another drug in your life. Here's really what I'd like to say about this page. This is about risk, and we are going to openly discuss risk in the presentation. So our legal team requires us to have this slide in the deck. But again, I want you to know and feel comfortable in the fact that we are going to openly address the risk. Ramu, in his opening comments, has already mentioned a few, and we're going to delve into some of the others. Next slide, please. So Ramu asked me when we first met how I knew Jay Young. And just to let you know a little bit about the culture of our organization, we are very spiritual here at King. And I've actually known Jay for a long time through my over 15 years via my church. And frankly, that's the reason that I'm with you tonight. And again, our culture here is to be ethical, be spiritual, be fully transparent at all times. And Jay is certainly the cheerleader of that campaign. And also like to call your attention to the bottom of this slide. If you would like to read Jay's book that both Ramu and Rahman referenced earlier, all you have to do is go to upsideog.com. OG is in oil and gas, and enter your information, and we will gladly send you a signed copy of Jay's book. And I've read this book 2 or 3 times myself. It's about a 2.5 hour read, and I think you'll find it to be real colorful and very entertaining. And I would highly recommend it if you're serious about investing with us. Next slide, please. So, as Ramu asked, why oil and gas? And you can go to the next slide, Ramu. So, there are 3 reasons that investors are attracted to this particular concept. One is the monthly passive income, and we're going to get into details about all 3. I call this the 3-legged stool, by the way. We're going to talk about each leg of the stool. A very key component of what we do is we generate monthly income, very similar to what you have experienced in the real estate arena. We generate significant tax savings. So roughly 80% of your investment is going to apply to is going to be written off against your adjusted gross income in the first year. So we know of no tax benefit that even remotely compares to this. And then lastly, what really sets us apart is for those of you who have participated in oil and gas programs in the past, most oil and gas programs are 1 or 2, maybe 3 wells, and those wells decline over a period of time. At some point, those wells no longer produce and you no longer have mailbox money. That is absolutely not the case with King. So we actually we divest of our assets before that significant decline begins. And we're going to really hone in on that in a moment, because I want you to understand that you have an opportunity to get your return of principal back in 18 to 24 months. We know of no other oil and gas program out there that allows you to recapture your initial investment within 18 to 24 months. Next slide, please. So demand. Let's talk a little bit about demand. We're gonna, if it's okay with the audience, we'll stay away from all the geopolitical drama. Here are some facts that you might want to consider. So last year, every day, we consumed about 20 million barrels of oil each day. This year, we're up to about 23 million barrels a day. So what you're looking at here, folks, is a trend of about a 15% growth rate in demand every year. So despite what you hear about ESG and all the other competition forms of energy, nothing is in high demand like fossil fuels. And even Elon Musk, talks about without oil and gas, our civilization would crumble. Jamie Dimon, of JP Morgan, talks about how we need more oil to avert war level energy crisis. And amidst all that, we have OPEC actually cutting production. Right in the middle of rising demand, OPEC is cutting production. Next slide, please. Another reason that folks are attracted to this investment is the woeful performance of the equity markets over the past 18 months, certainly this year. So year to date, the Dow's down 19%, NASDAQ's down 34%. All this in a period of time in which oil and gas have both been rising in price, not declining. Next slide, please. One thing to think about when you're hearing all these comments about ESG, just think about this fact. It takes 700 barrels of oil to build a Tesla Model 3. Okay, so for those of you who wonder, and we've been working conferences the past couple of weeks, we've had a lot of people ask about if wind or solar are threats to what we do, and the answer is no, at least not immediate threats. And just think about what I say, it takes 700 barrels of oil to build a Tesla. So that pretty much tells you the environment we're in. Next slide, please. And next, please. By the way, we on that, and you're fine, Ramu, on that previous slide, I do want to highlight the fact we are a domestic oil and gas company. We operate in the United States of America. We are somewhat patriotic. When you get to know us, you'll figure that out quickly. Also, what we're talking about tonight is infield drilling, land drilling. We're not active offshore. This is all infield drilling. Next slide, please. So strategy. Next slide, please, Ramu. So a couple of things to point out on this slide. So on your left, it's important to note this fund is designed for accredited investors. And if you don't recognize exactly what an accredited investor might be, here is the definition at the bottom. The second thing I'd like to point out, and this is very important, Ramu and Ramon both mentioned it earlier. So we follow a real estate blueprint. And if you can think of a real estate development in your own neighborhood, The developer comes in, acquires the land, ultimately will develop the land, and at some point actually sells the project. That's exactly what's happening in this program. So Ramu mentioned, we've already acquired the leasehold interest. And so that part's behind us. That heavy lifting has already been done. At this point, we are in the development stage, and hopefully 18 months from now, we will begin the divestiture stage. But it's important to understand the acquisition part has been taken care of. We're now in the development stage, and 18 months down the road, we will begin the divestiture. Next slide, please. So I mentioned, I told you in my opening comments that I've been doing this on the investment side about 15 years personally. And fortunately, I have never, and just admitting this to you, I've never invested in a 1 or 2 well deal. And I will just tell you, and openly, I'm telling you, I've invested with competitors. I've never had a bad experience in the oil and gas investment sector, never. And I think that's largely because I've never invested in a 1 or 2 well deal. In my humble opinion, it's just hugely important that whatever oil and gas opportunity you're looking at, I think you have to have multiple assets, and we certainly have that. So as this slide indicates, we're active in 5, actually 6 states now, and I'll speak to the 6th state in a moment. But we do everything we can to mitigate risk. And if you just kind of go down the line here, by participating in multiple assets, you still get the same tax deduction that you would get if you were investing in a 1 well deal. You don't have the declining internal rate of return. Remember, I mentioned in these 1 well deals, eventually that well will run dry. It might be 10 years, it might be 20 years, but eventually there will be no production coming from that well. That's not the case here. We're going to sell these assets before that significant decline begins. The dynamic IRR. So we're going to be drilling now for about 2 years, and what you're going to see is your monthly checks may start off a little on the low side, what we might consider low, but you're going to see a spike once these wells come on stream. That monthly income is going to be really dynamic, and so in other words, it's not going to be stagnant. It's not going to be declining. It's going to be growing. And we have an exit strategy. The 1 well folks don't have an exit strategy other than just letting the well run dry. We have a proven exit strategy. And then I spoke to risk mitigation. So there are all kinds of ways we mitigate risk. One is we're both oil and gas. And another way that we mitigate risk is by spreading out. We're in 5 states, 7 different formations. Another way we mitigate risk is the types of wells we drill. We drill both vertical and horizontal wells. We'll get into that in a moment too. Next slide, please. So speaking of horizontal wells, what you would want to know, and I'm going to keep it really high level here, what you would want to know about horizontal wells is, one, they're expensive. They are a lot more expensive than a vertical well. Where there is high expense, normally there's high reward, and that's certainly the case in horizontal wells. So in this fund, if you choose to invest with us, just know that the majority of the wells in this fund will be horizontal. We will sprinkle in some vertical wells, we'll sprinkle in some fracking, but the big boys, as we call them, will be the horizontal wells. Next slide, please. Very important slide. So what I would hope you would understand about this slide is the way we have projected, and you're going to see, I'm going to apologize in advance, you're going to see a lot of numbers in the next few slides. We've tried to make this real basic, real simple, but truthfully, you want to see the numbers. I know they might be a little boring, but they should be really important to you in your decision making. First thing I would call to your attention is all of our projections are based on $80 oil, $6 natural gas. I don't know if any of you follow daily or weekly pricing, but right now we're above both of those thresholds in the marketplace. Second thing I would call to your attention is we have already acquired 36,000 acres. Remember, I told you earlier, the heavy lifting has been done in this fund. So what's going to happen over the next 12 months? You know, what should your expectations be? Well, first of all, we have 18 what we call shovel-ready properties ready to drill. Collectively, over next year and the following year, we will end up somewhere between 18 and 21 proven developed wells. And also a comment that Ramon made earlier is, you know, we improved the neighborhood, if you will. So not only are we drilling these wells, but we're improving the value of the neighborhood. Whoever buys our leasehold interest in our wells will also be acquiring about 40 PUDs or undeveloped properties. And again, we're improving the value of these PUDs every time we drill one of these wells. Lastly, I mentioned 6 states. So we're sniffing around in Louisiana. I won't spend a lot of time on this, but Louisiana is very rich in natural gas. And right now, the focus of this fund is primarily Wyoming and the Permian Basin. Don't be surprised if over the next 6 months or so, you don't see some news about what we call the Haynesville Shale, because again, this is an excellent prospect for natural gas, and natural gas is really a hot topic right now, and high demand, high margin, something we're really interested in. Next slide, please. Okay, so I mentioned you can expect 21 wells. What we see happening over the next 18 months or so, we see 12 of those wells coming out of the Permian Basin. We see 9 of those coming out of the Bighorn. And over here on the right-hand side, again, I talked about the PUDs. So that once we drill these 21 wells, we anticipate the total value of those 21 proven wells will be somewhere in the range of $732 million. We think that there'll be roughly another 180 million attributed to the value of the PUDs, because again, every time you drill one well, you're improving the neighborhood. The total value of this partnership, once it's fully developed, will be in the range of $915 million. So let's just pause a minute and think about this. So we are raising $200 million. We are turning that $200 million of seed money into $915 million. We think that is worthy of your consideration. Next slide, please. Next. Probably next to the slide that pointed out the geography of our program, this is probably the second most important slide of the entire deck. And by the way, we're moving at a good pace here. I think we'll be wrapping up here in the next 5 or 6 minutes. So hang in there, please. I won't spend a lot of time talking about the tax benefit. We've already gone through that. I do want to talk about the center of the page and the right part. So monthly passive income. So once we start the drilling, you're going to see monthly income somewhere in the range of 14 to 21% ROI annually. So based on a full unit, the cost of a full unit with us is $200,000. So if you were to purchase a full unit, as these wells come on stream, as we start reaching the peak of our production cycle, your check should be in that $2,000 to $3,500 range, somewhere in this target range. And if you're wondering, well, can you do it or have you done it? The answer is yes to both. The fund we just closed 3 weeks ago, we actually had 6 months where we outproduced all projections in monthly income. So yes, we can do it, and yes, we have done it in the past. On the right-hand side, this is the exit piece. This is what makes us really unique. Again, I just want to stress, most of our competitors just let the wells run dry. Your wells will not run dry with us. We're going to sell the assets before that decline steepens. So you invested $200,000. Our goal is, and I'm sorry, I'm going to move here. Our goal is for that $200,000 you invested to be worth, after 3 to 5 years, $629,000, or a 3.14 multiple on your money. And we have some math to back this up in a moment. Again, we're starting this year. We just opened this fund last week, if you're wondering about the timetable, and our goal is to be out by the end of 2025. So think of this as a 3 to 5 year commitment on your part. Next slide, please. Taxes, and again, we're not going to spend a lot of time on this because we recognize that everybody in the audience has their own unique tax situation. So please just use this as a broad guideline. So let's say you do invest $200,000, one full unit. We're going to generate a K1 that you'll receive next March. That K1 is going to indicate a percentage of somewhere between 75 and 82% of a write-off for you. So your first year deduction should be about $150,000. If you're in a 40% tax rate, that means you save $60,000. In layman's terms, what it really means is your $200,000 investment actually cost you in real dollars out of the wallet $140,000. Next slide. Not going to spend a lot of time on this, but I do think it's really important you understand that the monthly passive income, MPI, you'll see this nomenclature in a lot of our literature. If you choose to invest with us, we have quarterly investment review. In fact, we're having one at noon tomorrow for all of our current investors. And MPI is an acronym that we use quite frequently. All MPI is, it's made up of actually 3 things. And you'll see at the very top, very small print, sorry about that. MPI is price, production, and expenses, okay? Also known as your monthly check. So what you need to know about MPI is that your MPI is, it's a ratio of 80% of that revenue goes to the investors and 20% goes to King as the operating company. In our last fund, King was the biggest investor, the largest investor in the entire fund at about $3.5 million. I think as a prospective investor, that would be good news to you, because it shows that we're on both sides of the equation. We're not only the operator, we're also an investor. So in this green part, you can anticipate in this current fund, us not only being the operator of the fund, we'll also be partnered right beside you. Our money will be parked right next to yours. Next slide, please. Okay, a very busy slide, but I'm going to try to simplify this. So there are 1,000 total units that we'll be selling in this partnership. Once we do our job, once we fully develop this partnership, each unit, and again, 3 to 5 years out, remember, that's the timeline here, 3 to 5 years. Each unit, once we've done our development work, will be worth a little over $915,000. And what did you pay for a unit? $200,000. Keep that in mind, okay? So your original investment is $200,000. We're turning that into $915,000 per unit. Realizing after the split, so I'm going to make this as clear as I can. So the second part of this equation is when we start divesting of the properties, it's a 60-40 split. So our investors get 60% of the profits from those sales. The operator, King, gets 40%. So you add your original 200 to the amount of money you made on the divestitures. You're now at $629,000. You started with 200, and that would equal a 3.14 multiple on your investment. I know that's a busy slide. I hope I've made that clear. Just remember 3x, as Ramon pointed out in the opening. Next slide, please. So just like in your business, in real estate, comps are a big part of our world. And this comp is actually from July. It's a fairly fresh comp. It's out of the Permian Basin. A question we get at these conferences occasionally is, well, how do you know you can sell this particular property for X dollars? And the answer is the comps. These comps are abundant. We just put one in the deck here just to show you that this is a very similar property to what we've been doing in the Permian Basin. It recently sold for $465 million. Next slide, please. Okay, this is probably the third most important slide in the deck, in my opinion. A question you probably have already thought of, and if not, should be thinking of is, do we know what we're doing, right? I mean, really, have we ever done this before? Do we have a clue how to turn $200,000 into almost $700,000 for you? Yes, we have a clue. So here's our track record. So in 2015, we built a pilot program. We ran a trial of Jay's real estate model. Let me specify that we've been in business 26 years. We've only been using this real estate model really for the past 5 years. Okay, this is a relatively new model. So in 2015, we built a pilot program. The net result was in that pilot program, the first time we ever attempted to do this, the end result was we generated a 3x multiple. Okay, so we started with $4.5 million and turned that into $13.5 million. Then came 2018. We ran another pilot, if you will, a pilot program. I'm sure all of you know what happened during this time frame. Well, actually, two things happened. One, the pandemic. The other thing that happened is some of you may recall that for a short period of time, oil was actually negatively priced. It was minus $37 a barrel. So as you probably can imagine, we struggled in this program. So, in my opinion, the best way to judge a sponsor is what do they do when the chips are down? What do they do when the outlook's really bleak? How do they treat their investors? So I'm really proud to tell you that this was not a successful program. Okay, it's hard to be successful when commodities are negatively priced. Just imagine that. I mean, you can't run any kind of business when your product is a negative number. So I don't want to sugarcoat it, folks. This was not a good time for us. Rather than just pat our investors on the back, thank them for their time and money, we made the decision to grandfather all of these investors into the program we just closed. So rather than expose them to a big loss and frankly, a lot of heartache, we brought them into the fund we just closed. And they are now partnered with us in the program we launched in 2021. And by the way, the forecast for that program is a 3.5 multiple, and so far we're right on track, maybe even exceeding those expectations. Next slide, please. So a little bit about who we are. So I think you would want to know that our senior management team, which is the top 4 gentlemen, collectively have 81 years of experience in this business. A little bit about Jay. Jay and his family have been in the oil business over 100 years. Jay is a 4th generation oil man. If you ever meet Jay, he will love to tell you stories about, he'd get out of elementary school and rush out to the wells, and his grandfather would always let him drive this stick shift pickup truck, and he'll go on and on about the good old days. But the point that I'd like to leave you with is you're not going to find this level of experience in any other deal out there. One of the key players in our organization is Paul Jerome. And we joke about Paul. Paul gets recruiting letters about once a week. And the joke is that, we give Paul a raise about twice a year just to keep him from opening up all those recruiting letters. But Paul's been with us a long time. Paul lives in, by the way, Pennsylvania. These gentlemen are all local. And I didn't mention earlier, we're domiciled in Dallas, Texas. Next slide, please. This is our final slide, and I want to thank you for being attentive. We are going to open it up for Q&A. Before we do that, you're probably wondering, well, if I want to participate, how do I do that? So obviously, Ramu and Rahman are your key contact folks. And really, it's a 2-step process. It's very simple if you would like to invest with us. The first step is you complete your DocuSign forms, and then the second step is you wire your money in. We do take checks. We actually even take Bitcoin, believe it or not. But most folks wire their money in. With that, I am going to turn it back to our host, and we'll entertain any questions, comments, anything that the audience may have on their mind.
Yes, sir. And, before we get into that, just do want to make a few comments. First of all, thank you, Steve. I really appreciate your time in the presentation. To reiterate a few things, I've met with Tom, I've met with Steve, I met with Jay. I've shaken their hands, and I trust these gentlemen, right? They inspire confidence in me, and we have a good relationship. We are a relationship-first business in TeamVelu Investments. For us, if you invest with us, you'll know our strategy is always people first. The business deal is last. So before we even looked at the numbers, we want to know, do our partners have the same value system and character that we do? And I can vouch that, Steve, Tom, Jay, and everybody we've met at the company shares the same value system that we do at TeamVelu Investments. So we're really looking forward to a strong partnership. And just to reiterate a couple of things that Steve said, I think he's so casual about what he says sometimes that, it just might get past you. When you make this investment, 75 to 82% is going to be depreciated in year 1, which for real estate investors is like an accelerated depreciation. Now, somebody had asked, well, how is this possible? In real estate, you have to be an operator, in order to get this. The way they're able to all pass this on to investors is that until your principal is paid back, all of us are general partners in this investment. And once we get 100% of our capital back, then we all become limited partners in the investment. Now, this offers a few different protections. One is we get tax protection, right? Or tax mitigation strategy on the front end. And on the back end, we get liability protection. You might ask, well, hey, that opens me up to liability as a GP, right? Well, King Operating is taking out an insurance on our behalf. So you think about anything that could go wrong on an oil field, the investors are protected with 100% insurance paid for by the fund that King is taking out for us. So we are protected on that front. Now, let's say, like Stephen mentioned, we run into a myriad of issues for unforeseen circumstances and the whole investment, doesn't go well. They have a track record of grandfathering into the future fund to guarantee, or at least you can never guarantee, but put you in another profitable fund with your same capital without you taking a total loss. So not only are you getting almost a full write-off, oh, by the way, I didn't mention, in the lifetime of the investment, they're going to write off the other percentage of the investment. Let's say we take a 75% depreciation year 1. By year 5, year 3 to 5, they will write off the other 25% in your K1s. So you have 100% depreciation, you have a minimum guarantee with King Operating, and you're looking at an upside that blows multifamily out of the water, right? Our projections in multifamily are usually 100%. For really, really good investments, which is often the ones that we present to you. King is saying 214% plus, and half of that is cash paid monthly. This is just not even comparable to multifamily. Now, with this said, what is our part in this? We're going to be going in for monthly meetings to the offices of King Operating in their Dallas office, which is their headquarters. So I will be going personally. I'll be meeting Steve, Tom, the team on a monthly basis. So if you ever have any questions, I will see them in person at their workplace. We'll be able to represent you and your questions to them and get you timely responses. So with that said, we're going to open this up for Q&A. We did answer one question. So the other one is the ROI slide one more time, right? So I think I just covered that as well. Now, someone asked, what is the minimum investment? Quality question. They said 1 unit is 200,000. Now, if you were to go to King Investments without TeamVelu, which by the way, even if you do, they'll track you and they'll add you back to our portfolio. They have robust systems, but you're welcome to try if you want. They're gonna round you right back to us. With that said, if you go to them, the minimum is 100,000. But through our strategic partnership with them, we offer a minimum of $50,000 at $50,000 increments, meaning you can put 50,000, 100,000, 150, 200, 250, so on. This way we can subscribe for quarter units at a time. Now, we'd be happy to work with anybody who's, again, we're accepting all sorts of investors, IRAs, LLCs, partnerships, joint, individual, just like multifamily, nothing has changed. So if you have a portfolio of investments with TeamVelu Investments already, you can use your existing profiles to invest with King.
So thank you, Ramu. So a couple of things. As Ramu said, the cash flow is pretty good, and they are saying right from 14% to 21%. So right there, you are going to, between the K1 and tax advantage and this one, within about 1.5 to 2 years, you are going to reap all your principal first, right? That's number one. And number two is, if you would like to go and visit with us the oil wells, maybe sometime we may go, that also is possible. But of course, the time is important, so we may have to make decisions and it will simultaneously happen. We may not be able to visit and then invest. That's not possible, right? So that is the next one. And the third one is, even if you go directly with them or anything like that, the returns are the same but we are going to serve you in between and things like that. And they, when we go there, of course, we have a minimum of a certain amount, like $2 million and all that. And certainly we will be able to serve you better. And so those are all some of the things I want to say. And because I know what oil and gas is all about, I always try to take care of my investors, and I put my money in there first. And we are going to deploy more than $100,000 into this investment, maybe more, maybe 200. And so I have done all my due diligence as well. So any other questions?
Can I
Please
add something else, Dad?
Please.
So it's not just hearsay. We actually have had our multifamily partners that you would have seen in our presentations co-presenting with us, invested with King Operating in 6 figures, earning consistent returns for over a year, that have vouched for their operations and their returns. So this is not even the first time in the family that we're investing with them, right? So we have past investors that we are very closely associated with.
Correct. Yes.
So the next question we had is, do investors pay tax in Wyoming? You will pay tax in whatever state you live in. You will not have to pay additional tax in Wyoming. I add an asterisk and say that we are not tax advisors. You must consult your CPA. Can tax deduction be taken out of your W-2 income? Your K-1 depreciation can be applied to your W-2 household income. Yes, same asterisk applies to the previous question.
Right, that is actually it is a CPA question. You have to finally confirm it with your CPA. So
correct. Everybody's situation is unique, right? So I'm speaking broad stroke. Your situation might be unique. Please do consult your personal tax team. Will you send out the recording along with the presentation and a link to the PPM for further study? Yes, absolutely. It's going to be on our portal, as always. And this is just like any other investment we do. What other questions does everybody have?
So, all right. So, Steve, is there anything else?
If I can end with a story, and then we'll hand it over to Steve.
Yeah.
So when we were talking with Jay came and shared his book with us. He personally signed it for Dad and for me. I was talking with him about scouting, oil and gas, etc. He shared a story with me how there's the book, right? How the prior week or so he was spending some time with Rex Tillerson. Rex Tillerson is the former CEO and chairman of ExxonMobil and the former Secretary of State for the United States State Department. He is since retired from both roles. He also was the chairman of the board for Boy Scouts of America at some point. I've had the privilege of meeting him personally through my previous role. So the reason I bring this up is that King Operating has been in business for more than 25 years, almost 30 years now. They've been around the block. They know the big players. They have access to these huge oil and gas companies, right? Steve, can you share with us how many employees King Operating currently has?
Well, I'll be glad to. Excuse me. So our HR director was in my office shortly before we began this call, and so whatever the number was, we now have 9 more. I just learned that, by the way. No, in all seriousness, I'm going, and frankly, I don't know the exact number, but if I were going to guess, with the new hires we have coming on in the next couple of weeks here, it's got to be close to 50. And I'll just share openly that we have outgrown this building. We've been in the same building for over 25 years. Jay recently sold this, but we own the building for all that time. And I know this is more than you asked for, Ramu, but we are growing. We're moving to a new office in the spring. By that time, at our current growth rate, we could have 75, 80 employees. Let me also mention that, and you didn't ask, but I'll volunteer this. So when I say, 50 to 75 employees, these are employees that are domiciled in this office building, not to mention all of our drilling folks, our contractors out in the field. That's a whole different number. So
Thank you.
we're not a small company.
Yeah, the reason I share that is because they're a solid size organization and growing. We want to join companies that are growing as they are growing, so we can grow with them. Steve, I'll say this with you and all of your colleagues on the call, right? I just want to be blunt and direct to our investors. Investors, like, why is that important for us? When a company is growing, they need capital to grow. And that is the time when they are going to be willing to share the most amount of their profit. When they're a huge corporation, they don't want to share this kind of profit with people. Now is the best time to get in with them for these kinds of deals. If we get in with them now, even if they change the terms in the future, they might keep us grandfathered, right? When we have seen the same in some of our other investments, actually, that you guys might not know, because we keep a grandfather clause, and newer investors with different companies get lower returns for our other multifamily and funds, etc. So this is a prime opportunity for us to join King and make a very healthy profit in some very uncertain times. So that's it for me. Dad, I'm going to let you sign off, and then Steve, you can sign us off completely. Over to you, Dad.
All right. Thank you very much. I really appreciate you, Ramu, for covering a lot of grounds. And some of the testimonials about Jay is really good. He's growing. He's a part of Tiger 21, and he continuously learns and continuously implements and continuously invents. And that is the type of people we always partner with. So it is not about just, just taking it easy and then doing the same thing over and over again. So they continuously go to big events and develop relationship, learn new techniques, and then implement them, and then they grow. And that is how we are also able to get a part of their success in this. And thank you all very much for the trust. And I'm really looking forward. And the time is like, we have to be funding it before the beginning of December or the end of November. And that is how we will also be able to make sure that we can take advantage of any tax benefits and all that. Of course, it can go up to December, but we don't have that much duration. Basically, we want to finish everything within 6 weeks time, approximately. And if anybody needs a little bit extension, maybe we will be able to give. And minimum investment is 50. And please just send us an email if you're interested with the amount, and then Ramu will pick it up, and then he will reduce your paperwork by transferring some of your information, and he will work with King Operating and create the document for you, so that you will need to only fill out very little bit in the DocuSign and sign it and send it back to us. Thank you all very much again, and back to you, Steve, for your closing remarks.
Well, thank you. And I just want to say, I'm certainly not going to be long-winded in closing. I want to extend our heartfelt hospitality to all of you on this call. And we're a family here. I don't know if you can pick up on that via this call, but we want to welcome you into our family, and we want to invite you to our office. We want to invite you out to our wells, and we'll do anything within reason to facilitate that. And again, I appreciate you investing an hour of your time, your precious time, to hear our story. And please take me up on the offer. Come see us, come to the office, go to the field with us. No strings attached. And if you choose to be part of the family, I think it'll be a great experience for you. And again, thank you for your time tonight.
Thank you all. Good night. And we'll talk to you all soon. Bye-bye.